Good morning and welcome to this Monday, November 11th edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats.com, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, it is November 11th. It is Veterans Day here in the U.S., so I'd first like to express my gratitude for all of our servicemen and women, past and present, for their service to our great nation. Hope everybody has a great day, and think of all of those who have served today. All right, let's get into the market action from last week. We'll start off with the Dow Jones Industrial Average. You can see the Dow did climb only 6 points, but it was another new record. The S&P 500 up 8 points, getting close to 3,100. Wasn't that long ago. 3,000 was a big number. Now we're looking at 3,100. I stick to my forecast. I still think we're going to go over 3,200 before the end of the year. The NASDAQ up 41 points on Friday, up almost 0.5%. Small caps, just kind of mostly flat, I guess, for the day. Still struggling on a relative basis, but it did make the breakout above the late July, mid-September highs around 980 on the S&P 600 small cap index. So we are getting all of the major indices at least breaking out and moving higher in unison. That is generally very bullish. 10-year Treasury yield, well, that was a while ago. Let's see. I know we were up a couple basis points. Right now we're up 1 basis point, 1.94. And we'll talk about this in a bit. But that breakout right there above 190 on Thursday of last week was really bullish. When you start breaking the new highs, new short-term highs on that 10-year Treasury yield, it's bullish because money is rotating away from treasuries. That's what sends the yield higher. And of course, that also produces the proceeds of which that can rotate into the stock market. So pretty important breakout there on Thursday of last week. XLV Healthcare. You can see that we had a pullback after breaking out late in October. We pulled back early November, coming back up. I'll tell you, biotechs, we're going to want to watch this group. It has been on fire for about the last 4 or 5 weeks. And when this group goes, it can really go. We've seen semiconductors. Biotechs are kind of made from that same cloth. Very aggressive. And when they get going, you sit back and you say, well, I'm going to wait until I get a pullback. Sometimes you just never get that pullback, or you don't get a deep pullback. Last week, you can see we had moved above 2,000, pulled back shallowly for about 3 days. And then boom, Friday, another big day, another breakout on the biotech index. 2,200. There's going to be some short-term resistance at 2,050, which we're getting close to. 2,200 is a really big level. I think if we go through 2,200, we're heading for 2,900. And when you look at it right now, 2,000, that seems like it's impossible, but I can tell you this group runs fast, and there is a pattern that supports that measurement to 2,900. Technology breaking out over the past couple of weeks above the summer highs. Technology continues to be a leader. Software, we haven't talked a lot about software. I mean, Microsoft's certainly doing well, and that's helping to keep the software index up overall. But a lot of the software stocks, a lot of the high growth, smaller companies, when I say smaller companies, I'm talking about some of the companies maybe with 50 million a quarter in revenues to say maybe 150 or 200 million. Those companies were on fire throughout much of 2019. They have taken a big break over the past 2 to 3 months. But software overall bouncing back thanks in large part to Microsoft. Utilities down, not a shocker. I've talked about this a lot. There were a lot of folks saying, well, the market was in bad shape because utilities and real estate were leading over the summer. It's not that bad. It's not a big deal when you have defensive groups leading during periods of consolidation. When you get the breakout to all-time highs like we've seen over the last couple of weeks, that's when you don't want to see defense leading, defensive areas. And here you can see that has not been the case. Utilities have been going down. Real estate's been going down. It certainly has been more of an aggressive led rally to the upside. More economically sensitive areas of the market have been leading. All right, so that kind of is what was going on Friday to close out last week. A couple of things this morning. We are looking at red futures. Not bad, but I guess bad compared to what we've seen of late. The Dow Jones looks like it might be down 100 points. when we opened. The S&P maybe 10, 11 points. I think I saw the NASDAQ was maybe 35 or so. Not bad when we've had these kinds of moves. And I talked last week in the daily market report. In fact, let me go ahead and show you. We do have a negative divergence on the 60-minute chart on the S&P 500. So anytime you set a new high, which we did on November 7th here, you can see that higher high, see the lower PPO. A lot of times what we'll see is either selling down to the 50-period moving average or sideways consolidation and allow that 50-period moving average to move up underneath. We tend to see that PPO move back toward the center line, and that's just the way the market works. I mean, we saw back in middle of October, you see these highs, and you see the S&P putting in lower highs. So price was going up, but momentum was slowing. And so a lot of times, again, there's your 50-period test right here. We just went sideways, eventually got down close to the center line, and then we broke out, and that gives us a little bit easier time to move higher when we break out after we've been basing for a period of time. So this basing period right now is not a bad deal. The fact that the futures are red a little bit, I saw a headline, traders are nervous about the trade war. It's like, give me a break. But they need something to put, in their headlines, generate some ratings. And so that's what it is. Basically, the market's gotten a little bit ahead of itself. I don't think there's anything wrong with a little bit of consolidation here. All right, some individual charts. Let's take a look at the crude oil. Crude's down 1% this morning, or at least it was maybe 20 minutes ago. Back down to about 56 3/4. We're in an uptrend now on crude oil. And until we go back down below, I'm going to say probably both of these moving averages. I mean, if we move down below 55, 55 and a half, I'd be a little bit more concerned in the near term on crude oil. Otherwise, I think we go higher. Now, I did mention the 10-year Treasury yield, and I wanted to bring it up. I show this every once in a while, but the reason I think it's so important to watch what's going on in the Treasury yield is when we do get these moves up in the Treasury yield, when we do spike, and I just talked about on that chart, I showed you how we just went above 190. When we get into an uptrend, and you can even see it here recently, this uptrend coincided with this breakout to an all-time high in the S&P 500. And you can see going back these blue shaded areas. Generally, when you're in a longer term uptrend in Treasury yields, and I'm talking about for months, not just days or a couple weeks, but when we get into an uptrend for months, that typically coincides with very, very strong positive action in the S&P 500. And so we're seeing that in the early stages here. Talked about the fact that 10-year Treasury yield, if we started moving, we got through 190, we would likely break out on the S&P 500, and that's exactly what we've done. So I think it's really important to understand the relationship there. Down here on the bottom is correlation. It shows the correlation of the S&P 500 in the 10-year Treasury yield over a 20-period time frame. Now, this chart is a weekly chart, so we're looking at over 20 weeks. So what correlation does is it goes back and it looks at the 10-year Treasury yield, looks at the S&P 500, and it says over a 20 period look back, how closely is the S&P 500 and the 10-year Treasury yield correlated? If they're positively correlated, you'll see the reading above zero. If they're negatively correlated or inversely correlated, meaning that they're moving in opposite directions, you'll see readings below zero. Now, I will not say that this is a perfect correlation, positive correlation, because they do go opposite one another. But money can rotate into treasuries, send the yields down. At the same time, money also moves into the stock market. We can have new money coming in. It's not all about the rotation. I think when we see the yield rising, and I haven't gone back and done any studies, but normally when the yield is rising, you're going to see the correlation turn very positive, because usually the things that drive people out of treasuries are the same things that would drive them into equities. But the reverse is not always true. You can have money rotating into treasuries and still have new money coming into the market and rotating, and have some of that money going into the stock market at the same time. I think when you get into these consolidation periods, that can be true for sure, because there's so much uncertainty out there. A lot of folks want to be in the treasuries for safety, but we're basing in a long-term bull market. So there's still new money coming into stocks. Anyhow, that correlation is pretty important. I just wanted to point it out. All right, in my blog this morning, actually before I get to that, let's talk about the Shanghai relative to the S&P 500. Because I saw overnight the Hang Seng Index had a rough day, and that's been a pretty steady move of late to the upside, but we did pull back more than 2% overnight. I don't think that's going to last. I see global markets moving higher, but some markets will move higher faster than others. And I just wanted to point out that if you're looking at what's been going on with the trade war, I think that the market has been placing its bets on the S&P 500 for a while. And as we got into some of those talks, and at some points when the S&P 500 was struggling, we saw the Shanghai composite actually outperform for a short period of time. But now that the trade war, I mean, it's still in the news. I'm sure there are a lot of folks that'll say, hey, it's not over. Wall Street's telling us it's over. That maybe it's because of the deal that was struck between the U.S. and China. I don't know. I just follow the charts. And what the charts are telling me is that Wall Street is not caring right now about the trade war. In fact, back in August when there were a lot of negative headlines about the trade war, companies like Apple, which would be negatively impacted by the trade war, never lost relative strength. They continued moving higher. So that was one of my first clues that the trade war was kind of being pushed and was a thing of the past. Now, we still got negotiations, but right now the stock market could care less. And you can see that in this chart as well. All of a sudden now, I think we've got folks expecting the S&P 500 to do better. And with the way that the trade deal was negotiated, I think that just about everyone would agree that the U.S., assuming that a trade deal is in place and is followed, the U.S. stands to benefit the most. And so that's what the chart's showing me. And we can watch these relative support levels, one from 2005, the other from 2018, and see if they hold. But if they don't, I would continue to stay away from the China market, and I would stick more with the U.S. I do think there are other global markets that will do well, though. I really like the German DAX. I think the DAX looks very bullish to me, and that also is good news for the S&P 500 because the correlation between Germany and the U.S. is as strong as any correlation from any other country around the world, in my opinion, going back the last decade or two. All right, now for that article, I did mention that a key new theme has emerged. I've talked about this before, but I just wanted to point out this chart because this is one thing we really need to know. And I've got a webinar coming up this afternoon at 4:30. It is the sneak preview of the top 10 stocks. We have portfolios at EarningsBeats.com. I'll be honest, the last 3 months, mostly because of the shift that's taken place. We've seen a lot of groups that were horrible performers all of a sudden have become better performers and are leading. That portfolio puts 10 stocks in each portfolio, holds them 90 days, no changes. Well, right about the last time we went in on August 19th, that's about the time everything flipped in the market. And one of the things that has flipped here, as you can see, we bottomed on the XLI versus the S&P 500, and we have now broken an almost 2-year downtrend, moving back to the upside. And I know for the last couple of years, you think, well, industrials haven't been strong. I don't want to be in industrials. That's a weak area. It goes through cycles. Look at what happened from middle of 2015 through the beginning of 2018, 2.5 years. You absolutely wanted to be in industrials. So now that this downtrend is broken, very similar to this downtrend breaking, very similar to this downtrend breaking, when it breaks, you want in. And I see a break. So just wanted to point that out. You can go back and read the article. We're going to talk a lot more about this tonight at 4:30 in the webinar. If you're not new, or if you are new to EarningsBeats, just go to EarningsBeats.com. This is a free event tonight. So when you get to EarningsBeats.com right here, you just click on this and you can register. Put in your name, email, in addition to us sending you instructions. This also registers you for our free EarningsBeats Digest newsletter. which comes out 3 times a week. I know this morning's focused on biotech's, been talking a lot about biotech's. Relative strength is building there. That's why I think it would be good to sign up and begin receiving that 3 times a week, Mondays, Wednesdays, and Fridays. And those in our Earnings Beats community are going to get that invite. That's why it's important to sign up here. Okay, let's keep moving. I want to get into some earnings reports. And there's not a whole lot of reports coming out this morning or even this afternoon that are going to be earth-shattering. So instead, I thought I would just take this time just for a couple of minutes to go through and check out a couple of the stocks. This is a little bit of the sneak preview of the sneak preview that's going to be coming up after the bell today. But these are the kinds of things we're going to be talking about. Some of the stocks that I'm seeing that have made big moves, very important. And I love these companies that make the big moves up, keep moving up with heavy volume. That's a really good sign of accumulation. Could be institutions getting involved. And you can see, of course, on a relative basis, I like these relative strength winners. So a stock like Steve Madden, SHOO, SHOO, that's one that certainly probably will get a little bit of airtime this afternoon. And then I'm just going to walk through a couple more here. VSH, this is Vishay Intertech. And you can see after bottoming back in August, this is one that turned literally in late August. We've seen this with a number of stocks, number of industry groups, and this is no exception here. Beautiful move up. Stock below 14.5 just 3 months ago, 2.5 months ago. Now up near 20. Look at the volume that came in with earnings. Look at the relative strength been building for the last 5 months. These are the types of stocks we want to look at. Semiconductors, mentioned how strong they can be and how quickly they move. Well, they usually are moving for a reason. When you see the group move, it's likely because there are a lot of under the surface positives taking place within stocks in the industry group. We saw that clearly with Cirrus Logic when they came out with their earnings report. This is one that I had actually mentioned to EarningsBeats members. I liked the way this was setting up, hitting into its earnings report. It gapped up. It absolutely exploded into earnings. I think this is one of the stronger semis out there right now. As you can see, the huge move. It may simply go along for the ride for a little bit, maybe even pull back. And if it does, we're going to want to be watching that rising 20-day moving average. One other semiconductor also that had been given to EarningsBeats members prior to the earnings report. We were expecting big numbers, and they delivered. Ultra Clean Holdings. Look at this move since earnings. Stock was at 18 just before earnings. It's now at 23. So that is almost a 30% move in about 7 trading days. And you can see the relative strength. So these are the things that we're going to be focusing on later in that sneak preview webinar. So go to EarningsBeats.com. Make sure you sign up if you have not already. All right, next up, let's take a look at upgrades and downgrades. There were a few. I'm going to go through maybe just a couple. First, I wanted to point out Alliance Data Systems. This stock was upgraded. Don't know what they were thinking. I see a stock that's been downtrending relative to financial administration. Financial administration, one of those groups that has seen a complete turnaround since the middle part or latter part of August. It has been downhill on a relative basis. And this is one of the worst stocks with tremendous volume. I see distribution taking place. How anybody can upgrade this stock is beyond me. Good luck. I don't see a bottom here just yet. I like to see a move to the upside, break the downtrend, start to show some relative strength. I don't care about trying to catch the bottom. If you were trying to catch the bottom in this stock, it's been painful to the downside. Let the market play out. I don't agree with this upgrade. HPE upgraded this morning, Hewlett-Packard Enterprise. This one I do like. I think after sideways consolidation, we've seen a nice breakout. It is in a group that is just kind of going along sideways here the past few months, but HPE is a leader. Last 3-4 months, very, very strong. Good, solid move. I agree with this upgrade. QTWO, this is Q2 Holdings. Got the breakout on Friday. Maybe we get a 50-day test here. It looks like we had a false breakdown. I don't know. I'm seeing a downtrend until we get through the 50-day moving average. I'm a little concerned by this free fall in relative strength. So, talked about many of these software stocks, by the way, that have not done well since August. Here's one of them. Perfect example. $93 down to 65. Probably, numbers, I don't recall the numbers. They probably weren't that bad, but Q2, I would be very careful with until it begins to show that this downtrend is broken. All right, let's keep moving on. There was one downgrade I'll give you, Cisco, networking company, and the stock has broken back up above its moving averages, starting to show a little bit of strength, although relative strength is not great. This is a downgrade. We're in a bull market, so unless I see a stock that's really in trouble, I would probably just ignore it. I'm not a big fan of shorting in a bull market, so I would do nothing with Cisco. It started to show a little bit more strength of late, but volume's been so-so. Relative strength, not good. I don't know that I agree with a downgrade here, but at the same time, I probably wouldn't be a buyer either. All right, let's get into some Monday setups. Last week, not so great. I know the worst one probably was CONN. This was one that I was looking for to stop right here around this 24 area. Friday was really the killer. Stock came back down, now trading near some very important support from early September, but it didn't do very well. One last week that did have a pretty good week was Costco. The stock made a move off its 20-day, went up, challenged overhead resistance, failed. Probably going to come back down, test this 20-day, but I still like Costco. I think it goes higher, and full disclosure, I do own Costco. This week's Monday setups, I'm just going to give you a couple of them here. First one, BJ's Restaurants. The worst part about this stock is restaurants. All of a sudden, the last 3 months, this is another one of those changes that took place back in August. The group was looking really strong and then completely fell out of bed. And so many of the stocks have not performed well. But BJ's actually, after putting in almost a double bottom here, broke back up above this high. So I think it has a chance here to start this uptrend. Closer you can get it down to the 20-day moving average, the better I like it, because you can keep your stop tight. RMD, this is ResMed. This is a company that came out with great earnings, big move up, continued pushing higher to 150, now has pulled back. And this is an area where it broke out from. I really like this. Get it down to low 140s with that 20-day moving average there. I think you have pretty solid reward to risk. Let's see. Next one I'm going to do is, let's do one more. How about AKM? Akamai. Actually, I'll do two more. Let's do Akamai. Akamai, now, if you look at it, you say, well, it's broken. It's broken down, big volumes, come back up, hit the 20-day, going lower. I don't know that I necessarily would disagree with you, but internet stocks overall have been pretty good, and it's just been this last 5 weeks, as the stock hit this high and has been consolidating, that it's pulled back on a relative basis. I'm going to give it a chance here, and what I'm looking at is this right here. So that this area of support, after it broke out on heavy volume in July, you see this double bottom. We're coming back down and checking this, testing this. I would say 84, 83 and a half. Anything below that, I'd be careful with it, especially if the volume is heavy. But this is an area where we could see a turn. And then the last one I wanted to get into was Shopify. We talked about stocks or software stocks that have been beaten up. Shopify certainly is one of those names. I really still like this stock on a long-term basis. And if you notice, it came right down to support here. And look at that bullish engulfing candle. If you go into the daily market report, I think it was on Friday, I actually had mentioned this one as a stock to watch because I really like the potential of a reversing candle on Shopify at this support area. Now, it doesn't mean we don't come back down a little bit in the short term. Maybe we'll come back down into that 280s. But I think that another pullback here could represent a solid reward to risk entry into Shopify. All right, those are the Monday setups. Let's see, what else do we have here? Got to go through pretty quick. Did want to just mention quickly on the industrials, and this was also in that article. Let me see if I've still, no, I don't think I have that article up. But if you go into the sector summary here, and we look at the last month, because really we've seen a big push to the upside in industrials. Here's the last month, financials and industrials. If you click on industrials, that gives you all of these groups, by the way. If you had looked at this 2 or 3 months ago, they'd all been at the bottom. And all of the ones that are on the bottom would have all been at the top. I mean, it literally has been just like a complete reversal in the market over the past 60 days or so. And I think, with the 10-year Treasury yield breaking out, industrials breaking out on a relative basis, I think probably this is going to be more of the norm in the near term, I would say, for the next couple months. So we'll talk a lot about that tonight. All right. Just wanted to also mention biotechs. I've been talking a lot about biotechs before we get in the 3 you must see. The biotechs, if you go into the Scooter reports right here, I just want to point out large caps, you got all of the large cap stocks. If you just type in biotech, you get biotechnology, and it's got it sorted here in Scooter order. Wanted to mention a couple of stocks here. Amgen stock continues to move higher after breaking out. This is one of the leaders. If you want to stay away from those really high-flying biotechs that can crush you on, FDA news on one product, if you want to stay away from that kind of risk, I'd say something like Amgen makes sense. Also, VRTX. If you go to a longer term monthly chart, you can see VRTX, after sideways consolidating for a couple years, is just making a breakout. So that one looks good. One that I own right now is Regeneron Pharmaceuticals, REGN. Talked a lot about this one recently. It has been sideways consolidating for 4 years. But if we go to a weekly chart, on this recent low, we had a false breakdown, and on the low, look at the weekly positive divergence. We are now getting this 50-week test, and we're approaching the center line. If this breaks out, I think this is a stock that you certainly want to consider. It is much larger than, again, some of those smaller cap stocks. All right, 3 you must see. Let's get into these. I'm going to start with one that I just mentioned. I just really like the chart on Shopify. So I'm going to bring up Shopify first. I like that reversing candle, and I'm going to annotate this for you just to show you quickly the support that I was mentioning earlier. But right there, you see this high right over here. We pull back, volume picks up, we break out. We come back down on heavy volume, we hold 280, 283. Go back up, we come back down on heavy volume, reversing candle, we hold that 283 level. Go back up, come back down on pretty heavy volume, reversing candle. If we break below 280, then all bets are off here. But until we do that, I think Shopify could be a candidate to move back higher. I think it could go back up to that 50-day moving average, or 50-day moving average, which currently is all the way up 326. All right, next up, I wanted to mention Pfizer. PFE came out with some pretty good earnings recently. Stock had been in a downtrend. It gapped up, took out the prior high. Never did get through gap resistance up here, though. So we still got this overhead resistance looming. But what we have done over the past week is pull back from about $38.50 to $37, testing both gap support and the 20-day moving average. So from a short-term perspective, I think PFE could look pretty solid here. The last one I want to mention, and this is a smaller company, this is Sientra, and this is in the medical supplies area. Check out the reaction to its earnings report after downtrending, going sideways here. We actually put in a double bottom. Reaction high was $7. We took that out, went back down, put in a higher low, moved back up. This stock was starting to show a little bit of relative strength over the past 3 months after downtrending, but now has broken out. And I also want to mention, look at the volume trends. When there has been movement, big movement, it has occurred to the upside, and it's been on heavy volume. I think there's accumulation taking place. I think this is an interesting stock. If it were to pull back and fill this gap or get anywhere close to the 7.5 area, I think Sientra would be really good. Even the top of gap support, which was at 830, I think presents great opportunity. All right, that is it for today. I want to wish everybody a great trading week. Again, join me after the bell today, 4:30, EarningsBeats.com. We're going to have a webinar. I'd love to have you there. Everybody have a great trading day and hopefully see you later today. Happy trading.